During the 16th century, tulips were first introduced in northwestern Europe from Turkey, arriving via the spice route. Tulips originally belonged to Central Asia, and these imported flowers looked like no other flower native to the European continent. So it is no surprise that tulips became a luxury item which were destined for the gardens of the rich society in Europe. These delicately formed, vividly colored flowers became popular in no time. The merchant middle classes of the Dutch society wanted to imitate their wealthier neighbors, and so they too demanded for tulips. Initially, it was a status symbol for the rich that was purchased for the very reason that it was expensive. But at the same time, tulips were known to be extremely fragile and it would readily die without careful cultivation. So, in the early 1600s, professional cultivators of tulips began to refine the techniques to grow and produce the flowers locally. However, the Dutch cultivators also learned that tulips could grow from seeds or buds that grow on the mother bulb. A bulb that grew from seed would take about 7 to 12 years before it starts flowering, but a bulb itself could flower within an year. This led to the creation of the so-called broken bulbs, which were a type of tulip with a striped, multicolored pattern rather than a single solid color. The demand for differently colored varieties of tulips soon exceeded the supply, and the prices for individual bulbs of rare types began to rise to unwarranted heights in the northern Europe. By about 1610, a single bulb of a new variety was acceptable as dowry for the bride, and a flourishing brewery in France was exchanged for a single bulb of a rare tulip variety. The craze reached its height in Holland during 1633 to 37. In 1634, tulip mania swept through Holland. Before 1633, Holland's tulip trade was restricted to professional growers and market experts. But the steadily rising prices tempted many ordinary middle class and poor families to speculate in the tulip market. Homes, estates, and industries were mortgaged so that tulip bulbs could be bought for resale at higher prices. Sales and resales were made many times over, without the bulbs ever leaving the ground. A rare bulb would sometimes be worth as much as 4,000 or even 5,500 florins, meaning that the best tulips would cost more than $750,000 in today's money. By 1636, the demand for the tulip trade was so large that regular markets for their sale were established on the Stock Exchange of Amsterdam and in many other towns. It was at this time that professional traders got into the action, and everybody appeared to be making money simply by possessing some of the rare bulbs. Indeed, it seemed at that time that the price of tulip bulbs could only go up and that the passion for tulips would last forever. These people began buying tulips with leverage, using margin derivative contracts to buy more than what they could afford. But quickly as it began, the crash came in early in 1637, when doubts arose as to whether the prices would continue to increase, and the buyers announced they could not pay the high price previously agreed upon for bulbs. Almost overnight, the price structure for tulips collapsed, sweeping away many fortunes and leaving behind financial ruin for many ordinary Dutch families. This was a story of a speculative bubble built upon a perishable flower, fueled by greed and herd mentality of people who were promised a fortune. Have you ever watched a herd of cattle as they graze in an open field? The sheep seem satisfied and calm as they eat the grass and stand in a scattered formation. Then suddenly, for no visible reason, one sheep stops grazing, turns around, and walks towards the barn. Interestingly, the rest of the sheep seem to follow the lead, one by one, until the entire herd is moving in a straight line towards the barn. It is as if the sheep are thinking, where's that sheep going by its own? What's he going after? It starts with a single sheep, which eventually spreads across the entire herd as if all of them want to get on this action. The other sheep will be like, whatever, I'm going to follow him. They follow the leader blindly, even though the leader does not seem to know what he is doing in the first place. This is an extreme example of herd mentality that we can use as an analog to the stock markets. Taking ideas from tweets or channels, a person starts buying a stock. He is followed by another person and so on until a group of traders are all buying, but for no apparent reason. Although we humans are more intelligent than cattle, there is this inherent instinct within us to follow the crowd. It is as if everyone is thinking, all of these people can't be wrong. The motivating force behind the crowd behavior is our tendency to look for leadership in form of balance of crowd's opinion, or in form of a few key individuals who seem to be driving the crowd's behavior by the virtue of remarkable ability to predict the future. So a typical example is cryptos and tweets from Elon Musk and celebrity figures like him, who influences a mob mentality among people who then push the prices to the moon or plummets the prices to hell. So theoretically speaking, a herd instinct is a behavior wherein people join groups and follow the actions of others. Herding occurs in financial markets when investors follow the crowd instead of their own analysis. The dot-com bubble of the late 1990s and the early 2000s is a prime example of the effects of herd instinct. So herd instinct or herd behavior is associated with a lack of individuals' decision making or introspection, causing you to think and behave in a similar fashion to everyone else around you. We are prone to herd mentality, conforming to the activities and directions of others in multiple ways. From the way we shop after someone gives us an opinion, to the way we invest solely on analysis or speculation of a market guru. The fear of missing out, or FOMO, on a profitable investment idea is often the driving force behind herd instinct, especially in the wake of good news or an event where we behave without thinking twice. But it makes sense to follow the crowd sometimes. For example, in a bull market, similar to the one after the pandemic, where the prices continue to rise, it makes sense to buy and hold. But when the market conditions change, you better be careful not to let other traders in the back of the herd push you down the cliff when you try to stop to avoid losing your earnings. Most often, the crowd is usually right until a turning point occurs. And why is it so? Because virtually everyone would have taken a position earlier, due to which the market is headed in a particular upward direction, and there are only a few traders left to push the trend up further. And this is the point where the counter trade initiates and moves the market in the opposite direction, and this is also when the panic sets in and once again a herd mentality arises, but this time traders start to sell off extensively to avoid further losses. So the trick is predicting when that turning point will occur, anticipating it and developing a trading plan to capitalize on it. This is a precise time at which the trader must put on his brakes and exit his positions. In fact, this is also the most difficult time to exit a winning position, as it is very easy to second guess the signal that one is receiving and to hold out for just a little more profitability. So straying from your trading strategy may be fruitful for a few times, but in a long term, it is always the individual with disciplined analytical approach that will win over the blind ones. Now the question is how to identify this turning point. This can be answered using The Art of Contrary Thinking by Humphrey Neal, where he discusses how to take a contrarian strategy. Taking a contrary opinion is not all about merely doing the opposite of what everyone else is doing. In a contrarian approach, a trader studies the market and tries to come up with an innovative trading plan. So this sort of plans would require a great deal of experience and thought. So it is done in a way that a trader must train his mind to think in the direction that is opposite to the prevailing general opinion. It's sort of like thinking in reverse. Meaning that you have to think of the reasons why majority of people may be wrong and then try to discover factors that may predict a change in the market condition or identify those sectors that may prosper from such a change. For example, during the corona crash, most investors pulled out their money from the markets and placed them in more stable assets like FDs and all, because almost all the sectors were affected badly and it is not wise to hold on. But at the same time, the pharma companies greatly benefited from the perks and allowances for their infrastructure and research. And so, a contrarian would identify such opportunities and capitalize on them. In theory, taking a contrarian approach is useful, but it's often hard to fight the herd instinct. While trading, people have this natural inclination to see what everyone else is doing and to follow it because it feels safe and comfortable. But if you are not careful, then following the crowd can lead to disaster because the crowd can be wrong. So, a good way to avoid this is to make investment decisions that are based on sound objective criteria and not let your emotions take over, and also try to develop a thinking like a contrarian. Study the markets carefully, consider the reasons why the crowd may be wrong. Search for the evidence that support your contrarian position, and if you're right, you can capitalize on it and make a big win. But at the end of the day, it is human nature to be part of a crowd, and so it can be difficult to resist the urge to deviate from your plan. But it is all about how you control your mind and psychology. I hope this video had an impact on you as a trader. If it did, please do like the video, subscribe to the channel, and do not forget to press that bell icon so that you won't miss out on the upcoming videos. You can also follow us on Instagram. The link is in the description, and I will see you guys in the next video. Till then, see you.